Hello traders, I hope everything is going good with you. Now this is video number 2 in our playlist, and this is where I promised that I will talk to you about various different types of charts that you can plot on your software. Software plays a very important role in the life of a technical trader. It's his most important tool. I will be using TradingView. Now, what is TradingView if you're completely new to the field, and what is a software? What are the different types of softwares? Which is the ideal software for you? All these discussions, I'll take it in our next video, right? But this one, I'm going to straight away, talk to you about that two-dimensional plane that we had drawn, the time and price thing. How does it look on a real software? And what are the different ways in which we can plot it? So let's take a look at my screen, and as you can see, I'm using the TradingView software. I have the widely used conventional Japanese candlestick charts, but I'll take it step by step in a very granular manner with you. And to take this forward, I have to tell you a story. Well, that's not exactly a story, it's a fact. If you do a Google check, who is the father of technical analysis? When was technical analysis as a subject? Where and when was it born? And all those kind of things. It will tend you towards Charles Dow and the Dow theory. Again, something I'll take it up in our follow-through videos, but you'll figure out that someone in the United States had thought of keeping a record of the price time thing and plotting it. This I'm talking about the New York Stock Exchange more than 100 years back. Of course, there is no computer and softwares like this. Those guys passionately used to maintain it pen and paper, and they used to draw it on large graph sheets or pieces of large paper. If you and I just now take ourselves back 100-120 years and think ourselves well suited booted in New York Stock Exchange, market used to, I think, trade for just 2.5 hours. What is the price data that you will get at the end of the day? The most obvious answer is the closing price. What was the closing price of the day? It started like that. With time and a little bit of more interest, and as things evolved, then they had the possibility of keeping a record of opening price, high, low, close, and with time, what started with just a closing price became a bar chart, a candlestick chart, and so on and so forth. So with that in mind, with this fact back of our mind, if we come back to our charts, and if you come to TradingView up here, you will see this particular section. This is the section which helps you plot various different types of charts. Please understand something very critical here. You have 4 main price points: the opening price of the day, the highest point of the day, the lowest point of the day, and the last and the most important is the closing price. What these different types of charts manages to do is to display it in a different manner. Just because I have a dozen ways to display does not mean I have to use a dozen ways. Just because something has come recently and something was 50 years back does not necessarily mean the recent one is a much better. What is important over here is to understand what they are trying to display and how will I be able to use it for my analysis. So with that in mind, the first one that you should look at is the line chart. I'll show you once more. In TradingView, it comes here. And it looks like this. A line chart plots only the close. Only the close. It's just those dots. You remember I had drawn in the previous video dots and you join them? This is that, joining the dot. I personally like the second one because it visually looks better, which is this one. That is line with markers. And yes, you can see that I have kind of made it, put a star. It's my favorite way of plotting it. So line and line with markers are essentially the same thing. It just gives me those markers. That's the point. That's the dot that was joined. This, my friend, is the most simple way of plotting price over time. Closing price, line with markers. There you go. We are looking at the chart of Nifty, And this is where it is trading right now as I create this video for you. Simple, easy, very powerful, by the way. Do not underestimate the power of a line chart. I did tell you that story, that fact, that as time evolved, there were more data to plot. So the market opens at a certain price, the market goes at a high, goes at a low, and closes. Why should I always keep an eye on the close? I don't get to see the high, I don't get to see the low, but that is data, and that can be of certain importance. Next in line comes the bar chart, the bars. This is the classic way of plotting charts. If you pick up any classic book in the field of technical analysis, I think the next video I should take it up. I'll share with you what are the basic books you should pick up if you want to, walk this path. So if you pick up any book like an Edwards and Maggie and all, which are the classic books in this subject, you will find a bar chart. Now a bar chart is like a stick, as you can see over here. It has a vertical distance, it has a left tick, it has a right tick. The lowest point over here is the low. The highest point over here, of course, no points to guess that, is the high. The one on the left here is the open, and the one over here, which is this, is the close. So now I get to see all the 4 price points. Earlier I could see only one, and you can see that on my chart they are color coded, either positive, that is blue, or red. No points for guessing again. If the closing price is lower than the previous closing price, it's red. If the closing price is greater than the previous closing price, it is blue. Now, whether you want to color it blue, teal, green, that is your choice. But if I take a look at this current bar, I know that the price chart, whatever I'm looking at, has fallen, is below the previous bar's close. Now, amidst all of these things, when technical analysis was picking up as a subject, all of a sudden someone realized that the Japanese had done a brilliant thing years back. It goes back 300, 400 even years back. And that's the Japanese candlestick charts, which you will find over here, the second one, the candles. This, I think, more than 90% probably of traders who looks at charts, many of them uses the Japanese candlestick charts. This is a complete study by itself. It's a complete new field by itself. So I'm going to dedicate few separate videos for the Japanese candlestick charts. What are they? The patterns, reversal patterns, etc. That's for a completely different video. But over here, what I'm going to share with you is it gives the chart a body. Please understand, the bars plot open, high, low, close. The candles also plot the same open, high, low, close. Nothing different is happening here. The only difference, if you look at a bar and then if you look at a candles, is it has got itself a body. It's got a cylindrical body, and of course it's got those shadows. Now, high and low, you don't want me to tell you this. The lowest point over there is the low and the highest point over here is the high. So that's fairly understandable. Where is the open and where is the close? The open can be over here. If this is the open, then the top will be close. Or if the top is the open, the down over here is the close. If the market opened and went up, closed higher, then the body becomes positive. That is a green body, blue body, or a white body. On the other hand, if the open is higher and the close is lower, it fell, then the body is red. Now, if you allow me, I'll show you that if I go to the settings of this chart and I change the color, say white and black, this, my friend, is the actual Japanese candlestick charts, the authentic, because they did not have colors, let's say, I don't know exact how many years back, but hundreds of years back, they did not have so many colors. And so they used to use black ink. If the day was negative, open is higher, close is lower, shaded black. If the open is lower, close is higher, don't shade it. That's a positive candle, that's a negative candle. Line chart, closing price. Bar chart, all the 4 types. It's like a stick figure. And then you have the candlestick charts, which is a completely different study all its own. Of course, candlesticks are more powerful. There's no second thoughts about it. But we are looking at price over time in 3 different ways. There are many other ways. You can see hollow candles. It's just few candles are not shaded. Then there's volume candles, which includes the volumes. And there are more ways of doing it. One of my favorite is down here, Heiken-Ashi, which I will dedicate a separate video later in this playlist. But to be honest, for beginners, these three are the most important: a bar chart, a line chart, and a candlestick. Now, it's obvious you're not going to use all three. You're going to use any one or maybe two. As you progress with me in this playlist, you'll soon realize line chart is powerful and candlestick charts is useful. If you toggle and use them both, tends to give you a better analysis. I'll stop this video here because my intention in this video was to share the three different ways. In the next video, I'm going to share with you a book list, a list of books that you should pick up, that you should read, which should help you in your journey of learning technical analysis. So do let me know how you like this video. And till then, take care of yourselves. Trade well.